Hello and welcome to the Paris Fintech Forum Communities Programme. I'm Elliot Gotkin. I'm a journalist and with Laurent Nisri, co-host of this exclusive video interview series produced with the support of Solaris Bank, Rise and BPI France. Now, a question for you. What do N26, GetSafe and Shapeshift have in common? Well, in addition to being among the best-known fintechs in Europe in neobanking, insurance and crypto trading respectively, they all count a German VC, Earlybird Ventures, among their investors. The firm's managing partner is Christian Nagel, who joins me now. Great to see you, Christian.
Thank you. It was great seeing you.
Crazy times during the pandemic, as we hope is what is now post-pandemic. How's business?
Actually, business is crazy. It somehow got ignited by COVID. It's a little bit strange because our industry somehow really got a big push and is sprawling kind of thing. And we're very busy actually. So and things have changed dramatically. So first we thought we couldn't do any deals without seeing the teams. Now we're doing deals without seeing the teams. So that's really something which is unusual for early stage venture especially. And but it's happening. And the push in digitization is a push basically very much. We see this very much in our industry since we invest in this sector. Not just our companies are benefiting from this, but we see more entrepreneurs seeking good opportunities or looking after good opportunities and trying to raise. So it's crazy times.
What were the biggest challenges you faced over the past 12 to 18 months? Was it acclimatizing, kind of adjusting to this new reality where you actually do deals over Zoom instead of meeting people in person?
Yeah, well, first of all, we didn't know when 1 year back, nobody knows which direction it's going to take. So what we did is basically what probably everybody did is analyzing our portfolio. And we did kind of metrics checking whether the companies are affected short term or long term or benefiting from this. And the interesting thing was that some companies have been affected short term, but all companies would be benefiting long term. So that was really interesting. And who has been basically not benefit or has been basically affected negatively was especially B2B companies, because B2B sales was just a difficult thing to do. And we didn't know back then, okay, will it ever going to work somehow? Do we have to wait until it's over and people can travel again? But this obviously also developed to better. So now companies got organized in terms of doing B2B sales without meeting the customer and build strategies on this and got tools for that and so on. So that has changed to a better. And obviously the companies which are anyways benefiting from the digitization, like in payments, like in e-commerce and so on, they are anyway benefiting from this. They have been basically growing throughout the entire crisis. And since we have not been investing too much in the very much affected sector, like in travel, transportation, for luck or whatever, but it was never strategic on our roadmap. So we have hardly any companies which went under, basically, not one, and most of them are long-term benefiting. And the ones where we thought they would be heavily affected, even they, as mentioned in B2B sales, they have basically found a way to get organized. And I think now we come to a situation which is very efficient in the end. So you basically, instead of meeting 3 times, you may meet only once and do 2 times Zoom. So it becomes a very efficient way, which is still good and still has some personal touch, which obviously we have been missing. And we also like to meet teams again before we invest to see how they're operating, how the mood is in the company. So it's still a very important part of our due diligence and our basically investment decision. So we are happy that this is going to come back now. But maybe there's no need to meet 3 times on site. Maybe it's good to meet 1 time on site and 2 times soon. That's just enough then.
Oh, well, bad news for travel companies, I guess. But I like the way that you kind of took a different kind of view of different companies when the pandemic struck. I'm just wondering if your post-pandemic investment strategy differs. You talked about going for companies which are going to benefit long-term from these digitization changes that we've seen, for example. But, are you after, for example, specifically in the fintech space, are you after different fintechs now than you were at the beginning of the pandemic, now that the world is, we hope, opening up again?
Well, I'm not sure if it may got triggered a bit or basically accelerated by the pandemic. But what we see is specifically in fintech and B2B, we see lots of new opportunities in fintech, and that's based. And we were thinking, well, will this fintech hype be over soon because everything is disrupted. And we believe on the B2C side, we are at the stage where we believe it could be, so to say. We reached the peak maybe already with the kind of with disruption. There will be more companies, but in terms of the disruption level, we've seen many things now being launched, but not on the B2B part of the business. And so the back end, if we want to say so, and this we see now being disrupted. And the main driver of this is blockchain. So we see more and more applications with using blockchain basically to disrupt processes, to attack the entire trust layer of banks. So banks have this trust basically function, and this is being attacked from all sides, basically by businesses using blockchain technology and smart contracts and so on, basically, and to go after this part of the business. And there we see a lot of new opportunities coming up now.
Okay, perhaps not NFTs, but I mean, you yourself have been with Earlybird. You've been at it with Earlybird since 1997, so that's quite some time. What actually made you go into VC investing in the first place?
Well, that's an interesting one. We started really early, indeed, in Germany, and it was different in other countries, but Germany there was hardly any venture activities back then. And I was coupled with McKinsey. I then got excited by when the wall came down, so the wall to East Germany, and I got excited by the entrepreneurial opportunities back then. And I took advantage by buying companies from the German state holding, the East German state holding, selling all the assets, and I did that. But in traditional industries like machine building, machine construction, components, and so on. So kind of mostly dirty industries, dirty stuff. But we were quite successful basically in restructuring. And the way we restructured these companies, and they were mainly big companies, we structured them the way that we basically, along the entire value chain, basically we formed companies for each step of the value chain. So the measuring department became the measuring company, the assembly company became the assembly company, the service part became the service company. And this worked very, very well, where we basically put people in charge, got them chairs, so they have been incentivized. And that somehow triggered the idea of basically having small plants and supporting them to grow. So that was what really intrigued us and worked very, very well in this environment back then. And then end of the 90s, it was the internet came to everyone. We had the Neumarkt coming in Germany, so companies could go public, which was not possible beforehand without proper business, which was the downside of it. And we all know what happened. The bubble burst. But this was the time when we started with this business at a time where there was hardly any venture activities in Germany. We just copied contracts from the US, like ALP contracts. We just took them and tried to mimic them for the German jurisdiction kind of structures we have, and got going. And then obviously we had the burst of the bubble, then everything really cooled down significantly. We had back then already some big activities in Berlin. They all cooled down to really zero or below zero even. So it was really kind of a freezing winter we had for a couple of years. And then it swung back, and now we have a very vibrant scene, obviously, in not just in Berlin, but in all countries in Europe.
Sounds like some crazy experiences you must have had in East Germany and Eastern Europe at the time. Can you maybe share with us some of the kind of craziest companies or encounters that you had back then, both in the dirty industries and also both kind of pre-dot-com boom and bust, some of the technology companies?
Well, dirty industries were kind of back in the old days a little bit, which was no relation to. And you can ask the question, what made me move from these industries to the other industries? It was just that we see the internet coming, the internet taking over. So there was not just, well, in East Germany we had this break and the wall coming down, but what we found there was nothing exciting in the end. It was only exciting from the entrepreneurial challenge, not so much from the technologies you've seen or something, because they were so much behind and you had to bring them onto par. So there was kind of an entrepreneurial challenge, but not so much in terms of really intriguing or exciting, because you want to change something. And with the internet, we thought basically the world is going to be different. So after the wall came down, the world wasn't different. The world was different in Germany, but not for the rest of the world. But with the internet, we knew that this is going to disrupt many things, and we can build businesses which basically are reaching far and really disrupt industry and change industry. And that was basically the point which motivates us back then to focus on this rather than on the old industries where you can optimize a little bit and they get better every year, 1 to 2%. But we were much more exciting and fast growing businesses. And we saw obviously this happening in the US and thought, well, this must happen here. Now it took much longer basically to get there. Much longer. So we expected it to happen already in 2000, but it took much longer. So we had a lot of business models we invested back then who miserably failed due to the fact that the bandwidth was not there, the usage was not there, people were not used to this, specifically in Germany, in Europe. People were really lagging behind and not so basically catching up on technology and using that. So this has changed dramatically. So we see now being in a much better position here also in Europe than back then. One, for instance, mistake we committed back then, we thought, well, we have to move to the US very quickly and open an office in the US, in Silicon Valley, in the heydays, basically, end of 99. And because we thought, well, the music adventure is in Silicon Valley, so we have to be active there and support companies going to Europe and vice versa, investing in companies in Europe, helping them in the US. And all this miserably failed. So we learned the hard way, basically, how to not expand into the US by doing things too quickly, by not also basically being present there, going over there. So this is something where we really can support our companies also in terms of how to expand to the US and not commit the same mistakes we did back then.
Right. Yeah, I know some of your portfolio companies have moved from Europe and also expanded into the US as well. But Christian, look, don't go away because we've got to take a very quick break, after which we're going to... Christian, don't go away because we're going to take a very quick break, after which we're going to continue our conversation with Earlybird Ventures managing partner, Christian Nagel. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. And now, Christian, I've got a few more questions for you. So let's talk about kind of the fintech ecosystem and investment a bit more in general. I mean, these are boom times for fintech. We've seen crazy valuations for some fintechs out there, whether it's Stripe or Klarna or many others. And I often enjoy asking investors this question. Do you think we're at the top? Are you seeing valuations of fintechs as being, primed for a fall, or are you quite confident that there's plenty more to go?
I think there's more to go. If you would ask me now, is the valuation of Klarna justified now? Could it be 30 million instead of 44 million? Could it be 20 million instead of 44 million? I don't know. I think it's just but the perspectives for these companies are there, and the business is disrupting many things, and is also made a jump with regard to digitization and just more business being online. And if you imagine that this is only part of the business, so lots of the B2C business, and we are even not there. We saw in the pandemic basically what is possible in terms of how much online would be possible. Obviously, these companies are benefiting from this, and this is reflected in the valuation. But not just what happened there. I think this will the behavioral change of many people. I think this will lead to the outlook that it will continue to a certain extent. And we shouldn't forget that the B2B part of, if we now talk about payments, is still not not online. So this also will be moved online. So what we see and basically people ordering on Amazon or other platforms will also happen in the B2B business. And this is even a bigger part than the B2C business, which is on the way to move and has made this jump. So that's why I think if you look in perspective, what the outlook is for those companies, I think it's still very, very good, even on those very high valuation. Now, the question again is a little bit demand and ask in terms of is it now the right? But I think we are building a very solid business model with an extremely good outlook here.
Christian, we just got a minute left, so I just want to ask you, as countries like the US and much of Europe emerge from the pandemic, economies are booming. Do you worry this will lead to higher inflation and interest rates? And how do you think this could affect valuations and the path to profitability for especially the fintechs in your portfolio?
Yeah, I'm a VC and I'm quite optimistic here. And if we look back 1 year, we were wondering why toilet paper has become scarcity and has become very expensive. And we have seen the same with the mask when there were no mask around, just tiny little tissue stuff, and it has become very successful. It is now very, very cheap. Like test is also the same. We saw them basically very high and low. Just mentioning this because I think that we are in this phase across industries. I think where we see some inflation, but it will correct in general the economies, and I don't see this basically dragging on for a long period of time. That's why also I don't see that valuations are really inflated. We may see some cases where we're a little bit too high, and companies need to grow into their valuation. But I think the markets will support these businesses to grow into this valuation, even they may be a little bit high or appear a little bit high now.
Okay, well, I guess having lived through the dot-com boom and bust, you perhaps have a very good kind of understanding of when things are getting ahead of themselves. But Christian, I'm really sorry, but we have run out of time. I know there's so much more we could have discussed. So I really just want to thank you, Earlybird Ventures Managing Partner Christian Nagel, for joining me today.
Thank you very much, Mary. Thanks. Great being here.
Thank you. And I'll be back again next week with another big name from the world of finance and technology. We do hope you'll join us again then. In the meantime, you can keep up to date with all the exclusive interviews and content from the Paris Fintech Forum Communities Program via www.parisfintechforum.com. Hope to see you next time. Bye-bye.